Hello, everyone. This is Realtor Linda Peltz. Today I'm here with Kyle Poulin, and he's going to tell you all about his business. Take it away, Kyle.
Hello, everyone. My name is Kyle. I work with Patten Mortgage Group. We've been around for over 35 years, and we do all the niche loans. So we do commercial, business, SBA loans, and we got DSCR loans, which I'll go into in a little bit, bridge loans. But we basically do it all year. So if you have any of those niche clients that need, help where they're not getting approved with other lenders, send them to us. We got a great way to find paths for them because we got so many different options. Um, the first thing that I want to go over is the bridge loan option, which I'm sure a lot of you guys are familiar with. But when you have listings that are clients that are wanting to buy a house before they sell their house, a lot of times they're going to be contingent upon the sale, right? While the
Yeah.
person that they're
And it's a
buying,
delay sometimes,
yeah,
and sometimes it costs them maybe the best offer because, they whatever can't do it right then because they're still trying to get into another house or something. So if you
yeah,
were already in your other house, then you could take that best offer instead of settling for one that's willing to wait on
Yep, exactly. And then, we got springtime coming up, right? Which is the hot commodity where everyone's buying and selling real estate.
you.
So
Right.
a
And
lot
they're
of time,
already going to be fighting over certain price ranges are a hot commodity, right? So
yeah,
anything, hey, if you want to buy $1 million house, they kind of
yeah,
sit out there a little bit longer. You have better choices.
yeah, yeah,
But any of us normal people that down around that average home sale price, those get dicey because we're still in a home shortage on our real estate side.
oh yeah, not, but they're gonna start coming up, right? More listings are
We're
gonna start
hoping.
coming.
We're
Yeah,
trying. We're trying to get
we're
the
trying.
listings out there. We're
Yeah,
trying.
yeah. Well, good news is, hey, rates are coming down. I'm sure a lot of you guys are aware the last couple of years have been really tough.
They
Um,
have.
but 6 months ago, rates were in the eights, nines, and tens.
Mhm.
Um, it's pretty
Well,
similar
it's
to
good to hear they're coming down
they're
because
coming
that
down.
has been a big one. They short them up, and that's why we're so short on listings, is no one's wanting to get rid of that
Yeah.
short up interest rate
Well,
back
yeah, I
through
mean,
COVID. It's like,
yeah,
oh no,
people got the
no,
2.25s and the 3.25
yeah,
percent. Yeah. And those
we're
are probably
not selling. It's like,
yeah, we're
but
not,
we
we're not,
need homes for our buyers.
yeah,
Please sell.
yeah, exactly. So yeah, we're seeing good turns in the market now. So things are picking up. But yeah, the bridge loan is a great asset because not only will it help the realtor capture their commission check faster because they're gonna be able to help them buy their new property before they sell their property, and then when they sell the property, it's just it's basically a no-brainer. Um, and I can go into more on that. If you work with investors,
I
um,
do. Yeah.
then a big one is the DSCR loans. Are you familiar with how those work?
I am, but some of our clients might not be. So
Okay.
kind of
Yeah.
go over what a DCSR loan is.
Yeah, so it's basically where you're getting qualified for the property just on the projected rental income. So it doesn't.
Doesn't have you don't have to have a great credit score, people. So if you're an
Yeah,
investor and you're wanting to do an investment, this might be a good loan for you. You do have to have a little bit more down typically, I think, on
yeah,
these
it's about
loans.
20-25%
Hmm.
down. Hmm.
But it doesn't rely on your credit score. It relies on how much can those units rent for.
Yep, exactly. I mean, and they're the easiest loans to get done, which is mind
Hmm.
blowing to me because it literally, it's great rates, like literally very competitive with their primary rates. And then it is just a great avenue to build your investment portfolio.
Hmm. It is a
Uh,
nice loan. I actually have one of those on some of my rental properties, so it is a
yeah,
nice.
yeah,
You do have to have a little bit more down on it. That's,
yeah,
our first time home buyers, sometimes they quibble over. They want to be able to move into a house with no money down. And it's like, well, I mean, there are
well,
programs out there, but you're going to be paying a little higher interest rate. So
that is true. So yeah, I
the
mean,
trade-off, do you want a
so
good or do you want to?
yeah, and not a lot of people are aware of this right now, but there is actually a grant up to 3.5% that does not have to be paid back for first time home buyers, or if you work for the state or done volunteer work. Basically, it's pretty open now, but like you said, the interest rate is going to be a little bit higher. So your
The
income has.
trade-off.
So if you make a lot of money but you don't have a lot saved, then that'd be a great option for you to get you into a new home, right? Did you have a question?
Well, I was going to say, kind of explain to some of our, especially our first-time home buyers, how do you qualify them? You said that. You said, well, maybe you make lots of money, but you didn't quite put it into savings. But there's a little more to it when you're approving them for a mortgage. I mean, I know it's based on like their credit score and um, you know,
Income.
yeah, income and different things. So kind of maybe explain to them what you're looking for when they come to you and say, hey, I want one of those and I'm willing to pay that little bit higher interest. How else are you going to qualify them? I mean, they do have to be able to pay for it. So
They do have
it's
to be able to
not
pay
like,
for you. Yeah. Oh yeah. No. And trust me, like a lot of people that want to take advantage of it sometimes can't. And the thing is if you, a lot of people don't know that if you have like a 401k retirement account, you can actually tap into that and not get penalized if you're purchasing a house. So if you have that avenue, that's probably going to be your better way to save you more money long term for the down payment. But for the income on the down payment assistance, the front end of the debt to income ratio has to be 48%. So for simple math, if you're making 10 grand a month, the front end can't be more than 4,800. The back end, which is including your credit cards, your car payments, all those bills that show up on your credit report, that can't be over 57% on the back end, including your mortgage, right?
So if you have a ton of debt and you're a little higher than that, would you say 57%? That's where you can kind of help guide them a little bit and say, okay, well, we might need to pay some of this off.
Yep.
Or you might say, hey, you're good to go. Everybody's different. So that's where you guys come in as far as pre-approving these people.
Yeah. Yeah. And so, I mean, if you can qualify for it, it's great. And a lot of times, you're going to be building equity about 10% a year. So when you do that, you're going to be able to refinance sooner than later to get you into an actual decent rate. Because, when you're not coming to the table with money for the down payment, then the lender's got to make their money somewhere. And then it's basically free money that's given to you by the government. This is just going to be short term, right? This is going to be until the funds run out. But from what I've heard, there's only one person that's doing this right now. And we're a direct lender, so we have over 200 lenders that we're able to use, so we can always get the lowest rates, lowest closing costs. Yeah, that is the option. I think it's going to be here till at least May. So if you have any first-time home buyers or people that want to take a look at it, I would definitely put a little bit of urgency into seeing if you can qualify.
Don't think it's going to hang around waiting for you to go.
Yeah.
Maybe I am ready and maybe I'm not, and then just sit on the fence for a couple months. It might not be here. So
yeah, why not? Hey, just like with the bridge loan, right?
Peter over and at least check.
Yeah. And I mean, like I said, because there's not too many listings on the market as of yet, right? So these homes are going pretty quick, and they're going to start going quicker and quicker. So the bridge loan is a very key to be able to get you into that dream home that you wanted. When you're selling your house that you're living in, right? It's your house that you've been wanting, and obviously it's time for an upgrade. So you want to make sure you get the house that you actually desire.
Well, and I'm getting ready to actually close one tomorrow that's kind of like that, and it almost blew up in their face because, right, it's contingent on the first loan of the people that's buying the home that's for sale. It's contingent on the loan of the people buying the new house. So there's three, there's several loans and a lot of lenders and a lot of people involved in it. And they had gotten a hold of me. Now I'm on the listing side of the big house that they're moving into. And they had to sell their house, which was a little smaller. So, and it's not the loan that they were putting on my listing, but it was the loan that the buyers had got putting on to the house that had to sell, right, in order to be on here. Whereas if they'd had that bridge loan, it wouldn't have been like that. They would have just bridged it, right, bought the big house, moved in. That house would have just waited for however many extra days that it needed for that other loan to get fixed.
Yep.
And they wouldn't have had to wait. I mean, it worked out, but right. That bridge
Yeah.
loan kind of takes that guesswork
It's like
out of it.
fingers crossed. Hopefully,
Yeah.
everything lines up. So yeah, the bridge
Hmm.
loan
So
is
it's a
great.
lot of contingent, and that's what they call it, contingency on the
Yeah.
sell. So it's
Yep.
a lot of contingencies you're waiting on, and
Hmm.
luckily these particular buyers just absolutely adamant they loved the house and wanted this house and please wait on him, please, 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 but not all sellers are willing to. Some of them are like, wow,
Yeah.
So luckily it worked out. But yeah, it's those get a little dicey, and sometimes you have to wait because there's so many contingencies in place that it's everything has to, kind of like that old saying, the stars have to align.
Yeah, well, that's the truest statement because like literally everything has to be perfect when you're doing a
Hmm.
1031 exchange and you actually have to get the house sold, buy this house. Everything just has to get aligned, right?
Whereas if they'd have just got that bridge loan for the
Hmm.
sale of the middle house, so the middle one in between wanting the big house, they could have got that, and then it would have all, there wouldn't have been so many contingencies and chances for something to go wrong. So
Hmm. Yeah, exactly. And then something else, since you work with investors, have you
mhm.
ever heard of a reverse 1031 exchange?
I haven't dealt with too many of them, so go ahead and explain that one because
Yeah,
I have
so
heard of it, but I
yeah,
haven't had to deal with it. So
yeah. So it's basically, when you have a client that is has a rental property, they're going to be selling it, but they want a upgrade and buy another investment
right.
property, right? So it's literally the same concept as the bridge,
Okay.
right? So literally they take the equity from their investment property to put it down on the new property, and then but the only thing that's different is it's only 60% LTV that you can
Okay.
go up to, while the primary is 75% for the bridge loan.
Okay.
Okay. Um, but it's, I mean, like I said, with this
So that's
market.
just kind of enough to cover like the down payments and
Yeah,
stuff.
yeah, exactly,
Not
right.
100% financing.
Hmm.
Okay. Well, that's
Yeah,
good to know.
yeah. And so just same thing with the bridge loan, because bridge loan, you can go up to 75%
Hmm.
um, of the equity. And then that way, because when you're selling the home, you still want to be able to leave with something, right?
Right.
So you don't want to just sell it and then get nothing for it. So it's a great way to be able to get into your new home and then not have a payment with the reverse 1031 exchange. It's for 6 months that you wouldn't have a
Hmm.
payment on that current home that they own. And then for the bridge loan, it's 12 months, up to
And one
12.
thing you might point out too is then you refinance them once you actually get them into the house or into the investment property,
Yeah.
right? Isn't that how it works?
So the cool thing is that when we're getting them qualified for their new property, right, it's just their standard loan, like it's a normal purchase, right?
Okay.
But the bridge loan is where we're using that to get them qualified with the down payment, right?
Hmm.
And after we, I just completely lost my train of thought.
Well, I was thinking on those bridge loans, and I assume maybe the same with that 1031 reverse is it's a bridge loan, so it's a temporary loan, and then
Mhm.
once all the loans have closed and everything's kind of died down, then you go in and you refi them into a
Got
standard
it.
whatever.
Yes. So yeah. So the primary loan, their first loan is going to be their normal house loan. Like, so basically, if they weren't doing a bridge loan or weren't doing 1031 exchange, it'd be the same concept.
Okay.
So when the house sells, right,
Hmm.
that you're listing for them, that's when they're paying off because it basically pays off the lender directly, and then
Okay.
they keep their equity, right? So then if the rates have come down, that since they purchased the home, then we
Okay.
will reach out to them and drop their rate as well.
Okay.
Yeah.
Yeah, I just thought that might be a good explanation for them because it does take a little extra paperwork once everything kind of the dust settles. Isn't that how they say it? Once the dust settles, we have a
Once
little
the
extra
dust settles.
paperwork we have to do.
Yeah, exactly. But I mean, super simple concept, and I mean, I have some pamphlets, but I mean, it's just super generic, which I don't know if you would want me to email it to you.
Sure,
Um,
definitely email it and we'll include it in the articles. That would be
mhm,
great.
yeah. But yeah, like I said, we do it all here. But I know that the biggest thing that caught your interest was the bridge loan. That's
Hmm.
what you wanted me to talk about. So Did I cover everything? Is there anything that you have questions on? Do you think your clients would have questions on?
Well, I understand it, but I've been in the business long enough.
Yeah,
Of course, I think the biggest thing is people. I mean, if whatever you want to do in your life, I mean, you have to check on it because we can't do a one loan fits all.
yeah.
So if you're on the fence and you would like to do this, let's get a hold of Kyle and see if there's a loan out there that would work with whatever you're trying to do in your life, and there's no obligation. I mean, he's going to be honest with you and say, no, that's not going to work, or we could set it up this way and then this one would fit within parameters of whatever it is you have going on. And then,
Mhm.
maybe you're ready here this week and we can start, because I can't do anything without you lenders giving me a pre-approval. I'm sorry, just because the buyer says, well, I think I'm ready, doesn't mean that we get to go looking at homes. We have to have that pre-approval. So once we get the pre-approval, then we can start. You do need to sign a buyer's agreement nowadays with the new laws and everything that's in place with whatever
Mhm.
realtor you're going to look utilize to go look at homes. But then we can start looking at homes. So there is a process, but maybe you're ready now. So if you get that pre-approval, you could start looking at homes by next week. If, Kyle says, well, we need to do a little work here, I need whatever you need, depending on what's going on in their history. Maybe we need 6 months, maybe we need 2 months, maybe we need a year. I don't know.
Yeah.
And then you'll guide them through whatever it is in their history that needs looked at. Then I know one time I had one that it was just they had a lease agreement. They couldn't get into the house that they wanted, so they went ahead, rented the house. It was from an uncle, but they put a lease on it, and we had to wait, I think, 3 months or something before we could convert that to a loan or something. I mean, there's just depending on what loan they go into, there's just different rules, and that's what you
Mhm.
lenders are here for, is to help guide these people. But we as the general public don't always know what those rules are for whatever type loan that they're wanting. So that's what we need you guys for, to kind of
Yeah.
guide them. But if they don't get a hold of you and say, I'm thinking about this,
Mhm.
you may have just delayed yourself right out of a sale of a home because maybe you're not quite ready like you thought you were, because you're not the lender, right? So get
Yeah.
a hold of Kyle is the point. And it doesn't cost you anything to say, this is what I got going on, and Kyle can kind of look at it and go yay or nay, and we can move forward in life. But
Yeah.
we as realtors, we really can't do our job until you get and put a great lender on the project. He's so crucial, and how efficient they are is so crucial to our job, because I can find them houses left and right, and I can, this one will work, this one will work, this one will work. But if we don't have a pre-approval and you've cooperated with the lender, there's nothing I can do. So as a realtor.
Yeah. We're a team. We're a team.
We do. We become and I've said this multiple times, we become a symbiotic team, once we get on these transactions. And it takes a good team, not just one of them doing all the work, because we have to work together. And
Yeah.
basically those pre-approvals are instructions for us realtors on how we write our offers up, because we don't know what loan. You have to tell us, hey, whatever, you need a credit back from seller, or we need a 60-day close, or I mean, whatever the instructions are, that's where they come from. People is from those pre-approvals from the lenders,
Yeah.
because us realtors are just dealing with the house and the contracts. So we have to know the instructions in order to get you whatever it is that you need to fulfill this loan.
Mhm.
That's kind of how that works. But do you have any contact information you'd like to put out there, Kyle, so people can get a hold of you?
Yeah. I mean, you can reach me on my cell phone number, 925-818-1092. And I'll send an email as well. So that'll be in the articles. That way you could
Definitely.
For
And it'll
realtors.
be down below, people. Don't forget, like our YouTube channel and get all this wealth of information. And I'll put all the contact information down there. So, unless you have something else to say, let's go ahead and close out and we can catch up another time and maybe give maybe a few more specific loans or something.
Yeah, we do it all here. So anytime you have questions or weird scenarios, you always run it
And
by
we
me.
get to see right where your little daily
Yeah.
cubicle is. This is it, people. This is where you find Kyle.
Yeah.
Everybody, this is Realtor Linda Peltz. It was a pleasure, Kyle. Keep up the good work, and we will catch you on the next one. My license number 01997670. Everybody have a tremendous day.